Good morning, good afternoon, or good evening, depending on where you are watching this video today. So, I, for those of you who have followed some of my videos previously, you know that I have traded a private account up until now, and I'm now embarking on these evaluation challenges. So the one I went with is Top Step. So I'm going to upload videos every week on a Sunday showing my week's trading. I done one yesterday on last week that we earned 2,600, I think it was. And I'm going to be totally transparent in these videos. We can join and do this together. If I have winning trades, if I have losing trades, I show all my results, all the live account results and everything. And if I blow the account, then I blow the account. And I want to show you something very important first before going into the actual model that I trade. I thought rather than just making the weekly Outlook videos, it'd be better to make a video explaining everything to do with not only the model on how I manage a trade, how I enter a trade, how I manage where to exit the trade and so forth, but also the model you can see up here, EVAL versus funded. Because when you're trading the EVAL stage, the evaluation, so on Top Step you need to get to 6k to pass, or if you get to minus 3k, then you basically blow the account, okay? So the most important thing here is, so Top Step 100k account is $100 a month, or in the UK it's $80 a month. It's a very low barrier to entry. You get a free reset. So if you don't pass your challenge and you fail, you get to this minus 3k, you can reset your account once a month. So you're getting 2 chances for this subscription here, okay? Now, with that information, do you think it would be absolutely stupid to be in a challenge and an eval for any more than 2 weeks? Because you've got the option to reset it. So what you need to do is you need to sit and think, right, how many trades do I place in a week? 3, maybe 4, and then divide that up by your 3k, and that will work out your risk parameters, and it should be about 500 or 750. Because if you're risking £500 per trade and you lose 6 in a row, then you blow your account. So that's 2 weeks, 3 one week, 3 the next week, and you reset your account and you go again. Or if you only place 2 trades a week, your risk parameters would be 750. Because if you lose 4 trades, you blow the account, but in the same token, if you pass 4 trades, you pass the account. You need to be very careful with these evals not to get stuck into being in them for months, right? You need to pass them, you need to pass them quickly. And if you need to reset and pay the subscription for 2 or 3 months, then so be it. Because when you come to be funded, right, the model that I'm going to show you after explaining this, in eval and in funded, remains the exact same. The model, the entry criteria, how I manage it, everything's the same, okay? But the risk parameters are totally different. So when we come over to a funded account, it's very simple. We stack accounts up and copy trade them, and we risk only 1-to-1 to make $200 per account. So we're no longer doing this 500 or 750 because we've actually passed the account now. And this 6 trades and 4 trades, we all know, we've all done it. You lose 6 trades in a row and you lose 4 trades in a row. It happens to the best of us. So when we come over and eventually take this over to a funded account where we're making real money, we need to lessen the risk, okay? So for 3,000, if you're risking 200, you can basically, you would need to have 15 losing trades in a row to blow the account, okay? So it's very unlikely. So if we pass 5 accounts, we're making £1,000 per trade because we're copying the 5 accounts. And if we have 20 accounts, we're making £4,000 per trade. Now remember that your 5 accounts, you've got your subscription costs, so it's going to cost you the $100 per account. So in one trade, you've earned $1,000. So you've paid for basically, it's $500 for your 5 accounts, you've paid for that in one trade. And then the rest of the month is all profit, 80-20 split with Top Step. So this is the model that I'm going to trade. I do have another model, a rotation model, that I will introduce. It's a little bit more complicated, but let's, crawl and walk before we can run. I'll make a further video on that if we, once we get to this stage with 5 accounts, 10 accounts, 15 accounts, 20 accounts. The rotation model basically quickly is grouping these into maybe groups of 10. So you have 10 copy trades, 10 copy trades, 10 copy trades, 10 copy trades. And then what happens is you only basically need to win on one of them to get a payout, because you'll be rotating them. So you've got group 1 you'll trade on Monday, group 2 on Tuesday, group 3 on Wednesday, group 4 on Thursday, and so on. And then if you have one winning trade, basically you'll get a payout. You just don't trade on that again, trade your other accounts. But we'll go into that a little bit further. So this is the risk parameters. Evaluation, to get to 6k, we're going to risk 500 to 750 and pass this evaluation in 6 or 4 trades. So in 2 weeks, I'm trying to pass this in 2 weeks. So last week we're up 2,600, so we're almost halfway there using this model. But when I do take a live account over, I'm only going to be aiming for 200. And also it's very important, I'm only looking for 1-to-1s, okay? Because as you see, I've got a very high win rate, and my trade direction last week was 90%. So a 1-to-1, and this is something we can play with, but we would obviously maybe secure the $200 and try and let it run, and we can, those things we can do there. So let's come to the model that we trade. So we'll just increase this here. So again, it's very simple. Keep things simple. We will only trade during London and New York sessions, okay? And these are highlighted. These are highlighted here. So you can see I have highlighted in blue the New York session, and it's not the full session. It's just maybe half an hour before the session opens, or an hour before it opens, and 90 minutes after it opens. So there's about a 2.5 hour window in here and a 2.5 hour window in here. So this is London in the red, and this is New York in the blue. Now I say we only trade in these sessions. I did take a trade on Friday here because I seen massive volume, and so you can't ignore this. Okay, so when you do see big candles like this and you are at the charts, you could potentially trade out with the sessions. So the next thing is breaking a level. We'll go into that in a second. And what is the range to the left? And then number 4 is where we take our profits. So let's come to an area. So I've drew this area here. So you can see this blue line here. So this is pre-market in London, and we're on the 30-minute time frame. It's very important. So we're on the 30-minute time frame, and we can see that we've got a resistance zone developing here. Let me break through it. Okay, so let's discuss here. Let's go into bar replay. I'll just break this down. So this is how the charts looked at pre-market. As you can see, we come right through. Now we have 2 choices here, right? We've got 2 choices. Number 1 is we can enter the trade during this candle as soon as it breaks through, okay? Or in the case of what I done here, I wait in the candle close. This is very important. If you look at every candle you can see here on the charts, try and find a candle that doesn't have an upper wick or a lower wick. They do exist, but they're very rare. Here's one here, right? It's probably one of the only ones on the screen just now that has no wick at the top or the bottom. There may be another, but I can't see it. So going off, this is a game of probabilities, and going off the basis that every candle has a wick at the top and at the bottom. Why would we enter the trade now? Because this is going to create a wick and we're going to get into drawdown. So what we do in this instance is I set a buy order here. So my order is sitting pending. The reason that is good is because it removes the emotion as well. It removes those sweaty palms. It removes that, the emotions, the fear to pull the trigger, all that stuff. You've just made a determination and said, I'm going to place my trade here, and when it comes down, it wicks me in, I'm in the trade. You will have instances where it comes down, it doesn't quite wick you in, and then it runs away, and that's fine. We can't catch every trade, and we need to accept that. We are trying to get the best possible entry. That's the reason why last week I had a 90% trade direction. Go and watch the video. It was the previous video. You can see it in the stats. So if we just take the tool here, and what we're hoping for is we're hoping for this to create a wick down the next candle, wick us in before moving up. Okay, so let's play one forward. Okay, so this is probably in the wrong place. It did come down and wicked in. If we were down here, we wouldn't have got wicked in. So yes, this is a strong move, okay, and going off the basis that this is probably going to leave behind a fair value gap, okay, it's probably very unlikely it's going to come back down and rebalance and retest this bottom here. So where do you put it? I tend to put it 50% between, let me just move this out of the way, 50% between this wick here and this body here, which would be somewhere like this. So in this instance I would have just missed this trade, and you just need to accept that. But let's say we were here, let's say we got wicked in, okay. So we're wicked in. Now the next part, let's just delete this. Where do I take my profits? So as you can see here on the left hand side, I've got a whole bunch of indicators that are switched off, okay. So probably the most important one I use is the session volume profile. To find that, just go into indicators and type in SVP. It's a default native indicator. If you don't have a subscription to a plan, you can actually find this in here. You need to draw it manually. Session volume profile. If you don't have session volume profile, I'm not sure if you need a subscription to get the session volume profile, but if you don't have it, just go into your tools here and go to fixed range volume profile. And you can see that. Just take it from midnight to current time. So let me show you how to use this just now. So click on it, fixed range profile it's called. If we go to, why is my time not coming up on here? Let's say it's here, for example. Click here, click to the top, and it gives you your volume profile, okay? I don't know if you need a subscription. You don't need a subscription for this tool, this one here, but I don't know if you need a subscription for this indicator. Anyway, so switch it on, and you can see here, so what this is showing you is, this is the volume profile. So the blue lines here, this is where 70% of this session volume was traded, and this orange line represents the point of control. That's where most volume was traded. I use these a lot for taking my profit. Now a lot of the times it depends on where we are on the chart. just now you can see we're way above, we've closed above today's, okay. We've actually, if we go back to yesterday's, you can see that we tapped down here and tapped into yesterday's, and we filled yesterday's. Yeah, there is a theory that says if you come out here and you re-enter, there's a 70% chance that you will fill whatever range you're coming back into. So yesterday's is filled. We can see here, this has been filled here, okay. Where is the next one? So the next one is up here, okay. But my target here would have been this. So if we just go back to replay, leave, and we'll start a new one. Okay, so that was the 30-minute, remember, let's drop to the 15-minute. So again, there's our resistance here. Break through it. Now, when would I enter when we broke through here? When? If I had a clean range here coming down, clean range, and I'll show you that a little bit further in the video, but if I had a clean range coming down here, we were in a session, I would enter here as we came through it, but we don't have a clean range to the left. There's actually nothing to the left. Probably here's going to be the next target. This area here, this area here. But it's not a clean range. Look at all the mess here. So this is a clean range. See this here, this big drop off? So if we're coming up, trading into this range here, let me get the arrow. So if we're trading into this area, it's a big clean range, okay? So if I'm entering here, this is where I would enter on a break of the candle, the breaking through this resistance. I wouldn't wait on the candle close. Let's turn the profile off just now because it's in the way. So look how big the candle was here as well. It just proves the point. We come through, and over here we've got a massive clean range to go after. Look, bearish candle, bearish candle, bearish candle, massive bearish candle. So when we break through here, to the left, clean range. That's when we take a position now. We don't wait on the candle closing, we just enter, okay? So, on this one, there is nothing here, there is no range, because we're at this cluster here. We can see this cluster, this consolidation. So, we wait on the candle closing. So, we'll wait on the candle closing. I'll just play it forward one time. There we go. Turn on our session volume profile. This is where we were targeting, up here. Because yesterday's value area low, point of control, value area high is not in play. So we then need to take it to yesterday's point of control. It's here, okay? That got breached when we broke through here. So the next meaningful level is not yesterday but the day before's value area high, and it also coincides with 4,000, okay? So that was our target, and we blast right through it, and then we've got a rejection wick. So that was what I was looking at, taking this entry. So let's look for another one. Let's turn off this session volume profile because it actually clutters up the charts. So here's another one here. So we're during London session. So let's go into start new. So this is London session starting. We can see here with this resistance zone, this big wick as well here is wicked off. So let play. And again, just what we were mentioning before, this is the one where we've got a massive clean range. Got a massive clean range right here to target. So I would be targeting maybe up here. Or remember at the beginning of the video, we're risking 750 to win 1500 during the EVAL stage. So we're looking for at least a 2 to 1. So if we're entering here, stop loss, it's probably going to be here. So this is all we need. Okay, we don't need to be aiming for a way up here. We could potentially do this when we're live and, you know, take money off the table here, take money off the table here, leave runners. But for just now, to pass the evaluation, we'll just target this area here. If we break through, this again, look, boom, straight away. This again could be where we set a pending order. So I'll just leave here. We set our order here because we're seeing this resistance, and just have the order sitting waiting here at this stage. This is where we would have our order sitting, so we don't need to enter a market order. We're removing all the emotions from the trade. Also, what I'm seeing here, looking at this, look at all these rejection wicks here. See how it's rejected off this area multiple times. It wants to go up. So I would have a buy order sitting here. Removed all emotions. You won this trade in probably about 5-10 minutes. Done for London session. Okay. Now when I'm trading, if I get a win during London session, I don't trade again on London session. I will maybe look at the markets at New York, but I don't like taking 2 trades in a day, but I will, but I'll reduce the risk. So that's where the 500 and 750 comes into play. If I've risked 750 on this trade because I've seen the clean range, seen this clean range here to trade into, if I risked 750 on this trade, then I won 1500. Okay, when I come over into New York onto this trade, okay, I'm risking only 500. Okay, so regardless of what happens, I'm going to end the day up $1,000 because I won 1500 here in London, and I'm only risking 500 here in New York. So I will either end the day up 2,500 or a guaranteed 1,000. So let's talk about this trade. As you can see here, we've created a support zone here. Okay, now what do we have to the left? Clean range. Okay, this is a clean range. 1, 2, 3 massive candles, no consolidation, no nonsense, just a clean range up. When we come down here and break this level here, I'm saying we've got a clean range. So I'm going to enter here. So let's do a replay on this. Okay, so there's our support here. Coming down now. It's a big wick here. So I would have potentially have entered here. There you go. Massive, massive trade. So if we take our, say we entered on this one here, so short position. Two to one. Again, 5-10 minutes trade. 5 or 10 minutes. So let's stop this bar replay and let's look for another type of entry. So as you can see here, I'm basically just entering always during a session. Now I just want to point out, I do sometimes take trades when there's big massive candles like this, okay? But they don't happen that often. Don't happen that often, and most of the times anyway I'm not at the charts. It just so happened that actually on Friday I had a losing 3 trades during London session, and I was down, and I took a trade and won 1300 on the, I think it was about 5-6 o'clock PM at night UK time, and I ended up the day up $600 or $700. So I traded 4 days last week. I never traded Thursday. I traded Monday, Tuesday, Wednesday and Friday, and they all ended up green days. So another important trade I take is, so here we're during New York session. You can see here we've created this support zone. Okay, I've created a support zone here. Now, just to zoom in here. Let me just go to replay, it makes it easier. So we're on this support zone, we're during a session, we've got a lot of volume, you can see the big candles here. Big bullish, big bearish, you know, they're both equal size. That doesn't mean anything, but if we play the next candle, very important this candle here, okay, very important entry. So what happened here, what I'm seeing is, get an arrow, bearish candle, okay, and this candle here, when this opens, you see how it comes all the way up, traces up, okay, then when we come down, we not only would take a position here because we're breaking the last 4 candles created this support, right? Not only do we break this candle here was a bullish candle when it was going up, because it opened here, came up, was bullish, it was white and bullish, came down. Not only did it break the last 4 candles support, it flipped bearish. So this is where the candle flips, right on this level. You see it happen time and time again. We see this happen. So this is another way where I will take an entry, and there you go, that would have been a winning trade. Because again, we are not looking here for 5 to 1, 6 to 1. We're just looking to pass an evaluation. Okay, so this went from here all the way down to here. So our short position, we enter here as soon as we break these wicks, and we have the stop loss just above that wick, and we're just looking for a 2 to 1, and that would have been here. Okay, so we're just basically drawing out levels. We're keeping it very simple, drawing out levels and making sure those levels are during a session. Here is another couple of levels here. We've got one here. If this level was broke, we could have potentially have had a long. If this level here was broke, we could have potentially have had a long. But the reason this trade was so good is because when we enter, we're trading into a range. Very important. If we break this, you're trading into this consolidation. If we break this, you're trading into this consolidation. So in this instance, we would have waited. This would have been irrelevant. This would have been irrelevant. We would have waited for this area to have broke, because up here we have a nice range that would have allowed us to get a 2 to 1 trade. Okay, risking 500 to win 1,000, or risking 750 to win 1,500, and then we would either pass or fail our challenge in 4 to 6 trades. Potentially a little bit more, considering you're going to have a lose here and there. But that's the reason why we never had the lines here. It's very important to look to the left. You need a clean range to trade into. Otherwise, it's just a gamble. The same here. No range to the left, just a gamble. This is the range here. This here and this here. Because we've got this clean area here, and here we've got this clean area here. So we'll just commit this bar replay. And I'm not cherry picking these. This is basically just, you know, this past week when I'm drawing out these levels. I'm not going to the charts and cherry picking certain days. I'm just, you know, for example, let's just look at the last day. We've got no drawings on, so this day here. So this would have been last week as well, maybe. 31st of October. So what do we see here? We've got a clean range to trade into here, but it doesn't go long. So this level here, you can see here we have a range. This actually happened after the session here, but just to show, you can see this is getting wicked lots of times, and then we close outside it. And in this instance, we would have waited for the candle closure. Okay, why? Because if we look at our stop loss, it's probably going to need to be here. So to get a 2 to 1, the 2 TP is going to need to be probably down a bit here. So in this instance, we wouldn't have entered just on a break because this isn't clean. I mean, you could call it clean. There's some bullish candles going up here, but then we've got a zone here and a zone here. So it's, yeah, it's a hard one to decipher. But if you see here, the candle closed outside. We had all these wicks here as well. It didn't look clean. So this is telling us wait on the candle closing. Because if we'd entered any of these times here, let's say for example here, it's not clean. This wick here came down but never closed. This wick here came down, never closed. And eventually this one comes down and does close. So this is where we enter. You can see here it retraced back up, probably to about the 50% mark between here. Actually come right back up to the level. We come back down, we take the entry right here. As this starts to flip, probably clearing this wick here, that's where we would have entered. Or a late entry would have been just waiting for it to clear all the wicks. So you've had a closure outside your support zone and you've had a break of all the wicks. So you could have potentially have entered here. So let's have a look. See where our stop loss would have been placed. Short position, the wick here. Stop loss just above the level. And your 2 to 1 would have been here. Perfect trade. And then if we turn on the session volume profile, you can see what would we have targeted here. Let's try and get this arrow. We would have targeted this 4,000 and the current day's value area low. I don't like having this on because it really clutters up the charts. So I'll only put this on just prior to entering a trade, just to see where the levels are. So let's look at another previous day. So you can see here and here we had some support forming. I typically go into the 30-minute when I'm doing the support, and then I switch down to the 15-minute for an entry. So if I just draw a little support line here, sorry, resistance. If I just draw a little resistance line here, this was pre-London. You can see when London opened, we reject here, and then we've got a nice range of both. If we were to break below here as well, we've potentially just got to here because this is a support zone, so you've not got from here to here. It's not really a trade setup, but in this instance you've got from here to up here. So if we take a long position, stop loss just below that wick, and aim for a 2 to 1. See how we're getting them all just on the one candle. If we actually drop this down to the 15-minute, can see here this move happened just on one candle. Look at this. And even on the 15-minute you can see another kind of support here, so you could have waited until that got broke. You could even have waited until the wicks got broke and still got your 2 to 1. You could have been up here, stop loss would have been about there. You'd have still got your 2 to 1 trade. So one last thing before we go. Every Sunday before I start trading, or every night before a new day, I mark up the levels, important levels that you should have on your charts. So I just draw these in lines, and I just draw them with the horizontal lines. So you can see here I've got the previous week high and the previous week low. The week before, low, and the week before's high. And I've also got the previous month's high and the previous month's low. These are very important levels. You'll see time and time again the market reacts at these levels, and it's good to know. Most of the time when I'm trading during the week, you can see here all this action in here, you're not affected. Okay, so it's very rarely do you come to them. But we did here, you can see here how it bounced right off it, started going up. So they're really important levels that you should have marked out in your charts. I basically just go to the weekly, or sorry, the monthly chart, and I just draw lines at the top and bottom and then name them. Then I go to the weekly chart, the daily chart, and do the same. So they're all marked out, and unless anything changes during the week and any of them get tapped, they remain on my charts, and I just reset them every Sunday. And as you can see, I am basically trading on the 30-minute time frame to draw my levels, my supports, my resistances, and then I'll maybe when I see something and it's drawn out. So for this example here, when I drew this level here and I noticed it on the 30-minute, so obviously pre-market, I then switched to the 15-minute, just in case I want to take an entry as it breaks through. So when I talk about taking an entry when it breaks through, or taking an entry on candle closure, or taking an entry on flip, bullish to bearish or bearish to bullish, that's all done in the 15-minute. 30-minute is just strictly to draw these levels out. So there, I would have took an entry there. So I hope this video is helpful. I just wanted to make a video. Obviously I'm going to be making lots of videos, trade recaps every week, going over the trades, but I thought it was better to make a little bit more of an in-depth video that I can point people to if they're asking about the model and how I trade. And we'll go a little bit more into the kind of risk parameters as we pass the challenges and take accounts over to live. But it's very important not to get stuck in these evaluations for months. You're not getting paid, you're not getting money. So the way to do it is just, it all depends on how many trades you typically take in a week. For me, probably 4. So I'm going to, divide up. I'm only looking for A+ setups. So the reason why I'm making these videos on YouTube as well is it's helping me to be accountable. I don't want to look like a fool showing losing trades and blowing accounts. I want to show me passing accounts. So if I make these videos, it's going to obviously hold me accountable. So I hope this has been helpful. Until the next video, please stay safe.